what you're looking at here. For example, this stock that I gave them, CTIC, I said if it hits 11 cents, because the channel was between 5 and 10, if it hits 11, you buy. But if it ever comes down and hits 4, what do you got to do?
Sell.
Sell, because now it's going below this channel. So it's got to be your stop loss. Now you're wrong. You're wrong. You were expecting this to keep going up. You're wrong. So you got to get out. All right. So the bottom of the channel is your stop loss. Yes, Paul.
Is this the same as cup with handle?
No, this is different. Yeah, this is much different than a cup with a handle. Okay. So, by the way, if you want to be a day trader, you would use channels and some of the other indicators that we do. This is a 5-minute chart, folks, on cocoa. Or you can trade anything on daily. You can trade stocks as well for day trading. This is a 5-minute chart. Okay. This is moving sideways for several days. It moves sideways. Which way is stochastics going? Rolling up, broke above the channel there. By the way, this made, in one day, this made you about $1,000 on $200 investment. Okay. So if you're day trading, well, by the way, most of my students want to day trade because they want to make money in their accounts every day. What that means is you're typically in the morning and you're out by the afternoon, okay? Or you're in at night and you're out by the next morning, one or the other, okay? So that's day trading is you're trying to build your account up by putting in trades every single day, okay? And we teach you how to do that as well, okay? I think that's a repeat, but I want to show you this one now. I've been showing you several going. By the way, you know, I taught this in Singapore and Malaysia. It works in the Singaporean and Malaysian stocks. Doesn't matter what stock market it is. The chart patterns all look the same, okay? So it doesn't matter if it's gold or Malaysian stock. Doesn't matter if it's oil, doesn't matter if it's soybeans. You're just reading the chart. You really don't care what it is, all right? But so don't be like those people that didn't want to meet with me and said, oh, he's buying oil, he's buying gold, he's buying soybean. Who cares, all right? So let me ask you a question, folks, very personal question. If you absolutely knew horse manure was going to double this coming week in price, how many of you would buy horse manure, okay? So you really don't care what it is, okay? All you're going to do is say, I'll make money in it, that's it, okay? So don't get caught up in, oh, that's soybeans, oh, that's gold, that's oil, oh, God, you know, that's Swiss francs. Who cares? And it doesn't matter what it is, just make money at it, okay? So here, this FEMSA is a Mexican stock. There's a channel, breaks below the channel. Where do we think prices will go now?
Down.
Okay. Here's another one here.
Is that when you would sell short?
Yes, you can sell short. We're going to do that in just a minute. As a matter of fact, this is the one I'm going to use the example on selling short. This is Merrill Lynch stock. Here's when you would have known when to get out of Merrill Lynch stock. Okay. Channel, 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 channel. Oops, what happened right there, folks?
Down.
Right below the channel, where price is going to go.
Down, down, down.
Went from 70 to 0. Okay. 70 to 0. Okay. And I'm going to show you selling short at 70, okay? And how, the kind of money you could have made. All right? Here's another one. What's this one? Now, remember, you buy when it breaks out of the channel, and the other side of the channel is your stop loss, okay? This is orange juice. Here's the bottom of the channel. Here's the top of the channel. Now, if it breaks either side, we don't care which side, the other side is your stop loss. So what that means is if it breaks out, it can go back into the channel as long as it doesn't hit the other side. Okay? As long as it doesn't touch the other side, you're fine. Guess what? Here we are in a long channel in orange juice, and what happened right there?
Below the channel.
Right below the channel. Where can we expect prices to go?
Down.
Guess where they started going?
Up.
Uh-oh. And as long as they don't do what?
Hit the other.
As long as they don't hit the top green line, we're okay, all right? They don't hit it, and then prices start to come down, okay? So it can go back into the channel, that's all right, as long as it does not touch the other side. If it hits the other side, you're out. You've got to get out immediately, okay?
So you can do a stop loss on a short sell or a...
Oh, yes. Yeah, you better have one,
Yeah.
okay? You know when you should have got out of the Dow Jones, folks, okay? What's this here, folks? And then this was back in, when was it? This was when I was back in 08,
08.
12,000, 13,000, it broke,
Yeah.
and there it went down to 6.4, okay? There it went, all right? So you want to know when to get out of the Dow. So you want to know when to get out of stocks and start going short, or getting out of Swiss francs, or, you know, euro dollars, or whatever it is that you're going to get out, okay? So you want to be able to do that, all right? So again, I'm just training your eyes to look at some of these things, look at some of these channels. Now on weekly charts, you can actually do them on shorter time frames because they're weekly charts, all right? This is a weekly copper chart. And you can notice this channel was pretty small, and yet it made a lot of money. There's your channel, there's your breakout right there. So it's a small channel. On a weekly chart, you only need 4 or 5 bars because this is for a week. So every one of these represents a week instead of a day. A daily chart would be every one represents one day.
All the other ones were daily?
Yeah, all the others you've been seeing are daily. Well, there was a few weekly ones like the German one. Well, some of the stocks were weekly. But this one is, I mean, most of them you're going to be looking at are daily. However, I do teach you how to look at weekly and monthly charts because sometimes that chart, for example, take a look at that. Once that broke out of the channel, look where it went. It actually went to 4, all right? Well, once it broke this channel up in here, right there, broke in here, this thing just went skyrocketing up, okay? So you're using this to get your entry points, to time your entry. You're going into one of these investments because it did something, and that triggered your buy order, or it triggered your sell order. So this is how you predict, or where the direction is, and also where your entry is going to be. There's a rhyme or reason for doing something. Yes?
Do you have some advice as to how to know which stocks to be watching?
Yes, none. Okay.
I mean, it's hard to
I mean, so folks, here's the challenge. I'm going to teach you 38 chart patterns, but the problem is how many stocks are there on the New York Stock Exchange? All right? There's over 10,000. So how long will it take for you to find the few patterns that are good on the stock market, okay? Now, I'm not saying you don't look at it, but what you're going to have to do is select a universe of stocks that you look at and say, I'm going to look at these 15 or these 20 and that's it, okay? Because I can't afford to look at everything, okay? So you're going to pick your universe of stocks. That's why you're going to do foreign currencies, because there's only 6 foreign currencies you can do in my program. I mean, you can do them all, but there's only 6 that I'll ask you to look at, and about 11 commodities, and that's it. So I can go through 6 currency charts and 11 commodity charts pretty quick. It doesn't take that long. And now I'll look at stock charts because a lot of my clients and a lot of my students are in stocks, so we look at them. Okay? But eventually, you're not going to want to do stocks either. Eventually, guess what?
Why are the commodities of foreign exchange stocks so much easier than regular?
It's not that it's easier. There's more liquidity, and the chart patterns are easier to recognize. Plus, you got the huge leverage. You know, for $100,000, you're only putting up $1,000 or $1,500 to control $100,000. So the leverage works phenomenally well. Here's a case in point. All right, I think I had the chart here. Let me see if I can find it here. Case in point here. If I can find this chart here, I think it's an Australian dollar chart. Now I can't find it here. Here it is, right here. Okay. Now maybe it was a Canadian dollar. I'm not sure. Take a look at this one, all right? This is the Canadian dollar 4-hour chart. Canadian dollar 4, so every one of these candlesticks represents 4 hours. So what do you see there at the bottom of the chart, folks? Channel formation right here, okay, on a 4-hour chart. And here we go, there's your breakout right there, okay? So there's your breakout on roughly, I don't know, somewhere the end of September, okay? Well, look at this, okay? By the way, the move from there to there is over $14,000 in 5 days. You put in $1,000 and you made $14,000 profits in 5 days. Now you know why you're going to be doing foreign currencies. You're not going to be able to do that anywhere else. Okay. Yes, ma'am.
Okay, if you push over to the left, there could be a pattern there too, right?
Sure. Oh, there's several there.
But do you want it narrow enough? I mean, so you want to always look for the...
Well, there's other patterns, and I'm not going to get into the other. There's actually some other patterns over here, but you know, there's we'd be here all day. We'd be here for several weeks. Ask them, they've been there.
Okay, but that's what I'm asking. So you
Yeah,
really-
so there's other patterns you're gonna learn to take advantage of. But I'm just showing you channels today, that's it. But there are other patterns that you're gonna be looking at.
Okay, but the one to the left wouldn't be considered a channel because there's.
No, that's too wide. This channel here is too wide. From here to here is way too wide. This is narrow in here. And this is a more manageable stop loss. In other words, if you're wrong, you're only gonna be wrong a little bit in that trade. The stop loss if you were gonna use a stop loss over here to try to use your channel here, this is a huge amount of money, probably about $2,500 stop. So it's too much money that's represented here. You're only talking about $400 or $500. So it's a very small stop loss on a big account, a big contract. Okay? I want to show you something because it leads into this. Back in, I guess the early '80s, kind of guy's book. I found this book, How I Made $2 Million in the Stock Market by Nicholas Darvis. Don't write it down. How I Made $2 Million in the Stock Market by Nicholas Darvis. Now you can see, I read this book in orange, I read it in yellow, I read it in green, I read it in, I read this thing 10 times.
He made it by selling a book.
And no, he did actually he had 36,000, he turned it into 2 million in 2 years, trading back in the 50s, okay? So I looked at the book, I thought I was one smart Mexican, I could never figure this thing out, I said, what the hell is this guy doing, and he doesn't tell you. But he made one mistake. You know what's in the back of the book? All right, guess what he puts in the back of the book? He puts, chart patterns. And he tells you where he went in. Well, I know how to read chart patterns, okay? So let me show you one chart right out of his book, okay? So that you can tell me what he was looking at. He doesn't never say that in his book, okay? Never tells you that in his book, but once I saw the charts in the back of the book, I figured this thing out. I said, I know what this guy's looking at. What is this here, folks? And then he says, I buy at point A, which is what? A break above the channel. And by the way, the others is where he's pyramiding up. He's buying more as it's going up, which I highly suggest, and you will practice doing that. Where you're going to make, folks, I've had my account grow over 1,000% in less than a year, actually in less than 6 months. The only way you're going to make 1,000% returns in your account is when you're pyramiding up. As it's going in your direction, you're adding more to it, okay?